Welcome back to Investing Talk podcast.
Hey there.
So today we're looking at a company it's sitting right on the edge of what I can only describe as a violent inflection point.
That's a good way to put it.
We're talking about Venture Global. And honestly, looking at the research, this doesn't feel like just another energy stock discussion. It feels like we're watching a business pivot in real time from this, massive cash-burning construction project into a cash-generating machine.
Violent inflection point is pretty dramatic, but when you look at the numbers, it's arguably an understatement. We're not talking about a gentle slope upwards here.
No.
We're looking at a headline number for the third quarter of 2025 that, at first glance, it just looks like a typo in the spreadsheet.
I saw that. I actually double-checked because I didn't believe it. You're looking at that revenue jump, right?
Exactly.
Yeah.
A 259% jump in revenue year over year.
259%. That's the kind of number that makes you stop scrolling and actually open the financial statements. It's the hook for the whole story.
It is. But the real question here, the so what, isn't just about one good quarter.
Right.
The question we're trying to answer is whether Venture Global has the staying power to rival the absolute titans of the industry. We're talking Cheniere, Shell, companies like that.
Yeah.
Because we are seeing some serious volatility in the stock price recently.
Oh, yeah.
And the market is trying to figure it out.
Yeah.
Is this volatility a warning sign? Or is this a massive buying opportunity?
Okay, let's unpack this because explosive growth gets thrown around a lot. But revenue is vanity, profit is sanity, right? Let me play the skeptic. Are they actually making money, or is this just top-line inflation because they finally turned the lights on?
It is definitely sanity time. They didn't just boost sales, they swung to a massive profit.
Okay, so not just top-line growth.
Not at all.
Yeah.
If you look at the same quarter a year prior, they were operating at a net loss. Bleeding cash, which is pretty normal for a company in build mode.
Standard stuff, yeah.
But in Q3 2025, a net income of $429 million.
Wow. So they went from the red to nearly $500 million in the black. That is a serious swing.
It is. And it's crucial to understand why this is happening. It's not some weird accounting trick or a one-time thing. It is purely operational.
Okay.
This is the transition from we are building things to we are selling things.
Yeah.
And you have to look at their facilities to understand the mechanics.
Right. Calcasieu Pass and Plaquemines. For anyone who isn't glued to shipping charts, what are those exactly?
Sure. So Calcasieu Pass was their first big project. It started producing LNG liquefied natural gas back in January 2022, but it really hit full commercial operations in April 2025.
That was the first engine firing.
Exactly. But the big new driver, the heavy lifter that's really moving the needle right now is Plaquemines LNG.
That's the one that just came online, right?
Yes. First production was just last month in December 2024. When you combine those two facilities, you were looking at 23.3 million tons per annum of capacity.
Okay, stop there. 23.3 million tons per annum. I see MTPA everywhere in notes. That sounds like a lot of gas, but can you give us some scale? Is that like a few tankers, or are we talking about powering a city?
Think bigger, much bigger. 23 million tons is a massive amount of energy. To give you some context, if you look at their full pipeline, they're aiming for over 50 million tons.
Wow.
That would rival the total export capacity of entire nations. They aren't just trying to be a player, they're trying to be a dominant force on the global stage.
Okay, so the pipes are open, gas is flowing, money is following. But let's talk about how they're doing this, because usually when I hear about LNG plants, I hear about disasters, projects that go billions over budget, years over time. How is Venture Global avoiding that?
This is the most fascinating part of their whole model. It's their true competitive moat. They call it the design one, build many strategy.
Design one, build many.
Sounds like something out of software development. It's more like a manufacturing philosophy, actually. See, most LNG plants are these custom-designed mega projects. It's like building a custom mansion on a cliffside.
Right. Everything is one of a kind.
Exactly. Every pipe, every valve is engineered for that one spot.
Yeah.
If one thing goes wrong, the whole project stalls. Venture Global does it differently. They use a factory-style modular model.
So they're building prefab sections in a factory and just trucking them in?
Effectively, yes. They build the core machinery, the liquefaction trains, in a factory setting, test them there, ship them to the site, and assemble them like Legos.
That makes a ton of sense. You eliminate weather delays, labor shortages.
Exactly. It cuts costs, but more importantly, it radically speeds up the timeline. That's why they're hitting these targets. And looking at their pipeline, it's full. You've got CP2 on track for first LNG in 2027. That's another 20 million tons. Then CP3 is planned for another 30+ million.
So if they pull all this off, what's the total scale we're talking?
If they build out the full portfolio, it's 56.6 million tons per annum. Like I said, that's nation-state level energy export.
That is incredibly ambitious. But ambition costs money, a lot of it. Let's look at the balance sheet because it's heavy. I'm seeing $9.5 billion in senior secured notes.
It is a mountain of debt. There's no getting around that.
And senior secured notes, that's basically a mortgage on the company's assets, right?
Correct. If things go bust, the lenders get the factory. But in the infrastructure world, debt is fuel. You can't build these things with cash. The key is whether the market trusts you to pay it back.
And do they?
It seems like it. They just closed a $3 billion debt raise in December 2025.
$3 billion.
The fact that institutional investors lined up for that right after they started production shows that the big money on Wall Street believes the cash flow is coming.
That's a huge vote of confidence. And I did notice something else. They declared a dividend.
A very small one, yes. A cash dividend of 0.0101 cents per share.
Okay, that's tiny. It's basically a rounding error. Why even bother?
Don't look at the size. Look at the signal. It's a psychological flag plant. It tells the market we are confident enough in our free cash flow that we can start giving some back.
It's a flex.
Exactly. It's a flex.
Okay, before we pivot to the charts, you mentioned one other advantage. Vertical integration and the Haynesville Basin. What does that mean in plain English?
Sure. It means they have a direct line to some of the cheapest gas in the country. They control the assets across the chain production, transport, shipping. That protects their margins.
Okay, so operationally, they've built a money-printing machine. But if you look at the stock price, the market doesn't seem to know how to value it yet. It's all over the place.
Whipsaw is the word.
I mean, I'm looking at the chart for late December 2025. On the 29th, the stock jumps. What is it, 9.4% in one day?
A huge move.
For what should be a boring infrastructure stock, yeah. But, and here's the skeptic in me, that jump came right after a 9.8% drop earlier in the month. So we dropped 10, popped 10, we're just running in place, basically. What's driving this?
It's a massive tug-of-war. That 9.4% jump, that was pure macroeconomics. We had cold weather forecasts rolling in, natural gas demand spiked, and the market realized, wait a minute, Venture Global sells gas, and winter is coming.
So they're super sensitive to the commodity price. If I'm freezing in my house, their stock goes up.
Extremely. When gas gets expensive, their margins expand, and the market tries to reprice their earnings power instantly.
So for a trader, this isn't necessarily a bad thing. The market is kind of caught between the operational upside, that production ramp we talked about, and all this news noise.
Precisely. It's pricing in future cash flow against current headlines.
And that two-way volatility is a gift if you're a swing trader. Those dips, like that 9.8% drop, look like buying opportunities if you believe the winter demand story.
That's how I see it. The drop was a reaction to news, but the rally was a reaction to fundamental reality. People need heat.
Let's pivot to sentiment. Price is one thing, but what's the feeling out there? You pulled some data from Alpha Vantage?
Yeah, the weighted sentiment is actually quite strong.
Right.
We're looking at an average score of positive 0.551. So the algorithms reading the news think things look good. 4 out of 5 major headlines were bullish.
And that aligns with the debt raise, but it's not just banks, right? It's customers.
Right, and you have to look at who is signing these contracts. These are 20-year agreements. These are marriages, not dates.
Who are the partners?
Heavy hitters. Mitsui. Tokyo Gas. A major agreement with customers in Greece. These are countries and companies betting their energy security on Venture Global for decades.
And they've got regulatory wins too, I see.
Yes. Federal approval for CP2 came through. They've already mobilized for site work. That's a huge green light.
Okay, so the bulls have contracts, permits, profit. But we have to talk about the bears, because there was some ugly stuff in there too. Let's unpack the noise.
The noise is loud.
You mentioned that 9.8% drop was triggered by a guidance cut.
Yes. Mid-December 2025, they revised profit guidance down. Markets hate uncertainty, and they hate it when you promise one thing and deliver another. It caused a knee-jerk sell-off.
But the real elephant in the room is the litigation. I'm seeing multiple class action lawsuits about the IPO. What are we dealing with here?
This all centers on the IPO from January 2025. The core allegation is that Venture Global made misleading statements to investors.
Misleading how?
Well, the specific accusation is, it's pretty spicy. The lawsuits claim that Total Energies, one of the biggest energy companies on the planet, rejected Venture Global as a supplier.
Rejected them outright.
Yep. And the reason they cited, a lack of trust.
Ouch. That's like being accused of cheating by your ex, but your ex is a titan of the industry. When they say they don't trust you, that's a red alert for the whole sector.
It definitely stings. And the allegation is that VG didn't disclose this properly or painted a rosier picture than what was reality.
And there's a deadline on this legal drama, isn't there?
Yes, April 18, 2025 is the deadline for the lead plaintiff. So that creates an overhang. Investors are nervous about a massive settlement or a reputational hit.
That's the real risk, isn't it? The reputation. If Total Energies doesn't trust you, why should anyone else?
That is the bear argument. But
Right.
let me push back on that.
Go for it.
If their reputation was truly in the gutter, why did Mitsui sign a 20-year deal? Why did Tokyo Gas sign a 20-year deal? Why did Greece sign up?
That's a fair point. Those deals happened after these issues started bubbling up.
Exactly. These massive institutions do incredible due diligence. They have armies of lawyers. If they saw a fatal flaw, they wouldn't sign a 2-decade contract worth billions. I'd argue the demand for reliable American LNG is so high it outweighs this reputational noise. The product is just too valuable.
Money talks. What about execution risk, though? CP2 is targeted for 2027. In the energy sector, 2027 often turns into 2029 really fast.
Construction delays are the classic killer. It's a valid fear.
So why believe they're different? Just the modular thing.
Because they've proven it. Look at Calcasieu Pass. Look at Plaquemines. They have demonstrated speed their competitors lack. The modular strategy isn't a theory anymore. They have plants proving it works. They're already building the pieces for CP2 so they can snap them together later.
The factory is running even before the site is ready. It de-risks the timeline.
Exactly.
All right, we've looked at the growth, the debt, the lawsuits, the revolution. Let's give a final score. Where do you land?
Taking everything into account, I'm assigning a bullish score of 7.5 out of 10.
7.5. That's solid, but it's not a table pounder. Walk me through the math.
It starts with fundamentals. You can't ignore a swing to $429 million in net income. The execution is there. The factory model works. And the potential capacity, 56.6 MTPA, is world-class.
And the deduction, why not a 9?
The litigation overhang and that guidance cut. You have to respect the risk of the lack of trust narrative. And the guidance cut shows management is still fine-tuning things. It just introduces enough uncertainty to keep me from going all in.
So what's the strategy? How do you play this?
I recommend a swing trade approach over the next 6 to 12 months, looking toward the Q1 2026 earnings.
So we ride the winter wave.
Ride the winter demand, yes.
Yeah.
But also, you watch that April legal deadline. That's the catalyst. If that clears, if the lawsuit is dismissed or settled reasonably, the cloud lifts.
And if the cloud lifts?
The stock could re-rate 25% to 40% higher. It would move up to trade at the same multiples as peers like Cheniere. Right now, it's trading at a discount because of that fear. Fear goes away, discount goes away.
High risk, high reward, powered by cold weather and cold hard cash. It's a fascinating setup.
It really is. It's one of the most interesting stories in energy right now.
You know, there's one thought I can't shake. We've talked about money and contracts and lawsuits, but when I look at those contracts, Japan, Greece, it makes me wonder if Venture Global is becoming more than just a company.
How so?
With all of the geopolitical instability, American LNG is becoming a geopolitical weapon. It's security.
That's a profound point. In a way, a bet on Venture Global is a bet that the world needs energy security more than it cares about a bad relationship with Total Energies.
Exactly. Something to chew on. Well, there you have it. That's our take on Venture Global. Before you go, we want to hear from you. Are you buying the modular revolution or staying away? Comment bull or bear down below.
Yeah, I'll be reading those. I want to see if anyone's brave enough to take the other side of those 20-year contracts.
Thanks for joining us. We'll see you next time.